Welcome to TradeTheMBA.com. This is John. This report is for the 28th of July. And well, yesterday we had the Fed come out and basically raise rates, deny to give future guidance on what's going to happen, a la the ECB did the same thing. And this pretty much indicates to everyone in the market that obviously there's going to be slowing from an economic standpoint pretty darn fast going into the end of the year and the start of next year. And so the expectation is that next year we will start to have interest rates eased. So they're already pre-planning the lowering of interest rates even before they've fully absorbed the ones that have happened, or to the extent of the slowdown. Now, the Fed indicates that we're not in recession and that there really isn't any concern whatsoever from an economic standpoint. So someone's got to be wrong in that setup. That's going to be an interesting one to see to find out. The market believes that things are rosy and not going to change, and that easy money is coming back. It's just a matter of how long before it actually gets here. And they think it's going to be pretty quick, but I think they could be really sad if there's not the economic halt that some in the market believe that is already starting to take place. And if that doesn't turn out and the Fed turns out to be correct, which would be surprising in my view, then you'd have quite a dynamic change. That would be a huge negative from a market standpoint, because it means that rates then would not be coming back down, and that would change pretty much everything about the dynamic. We're already seeing plenty of companies talking about the headwinds that they face at this particular time. The real question, though, is it enough to tip things all the way over the edge? And this is where we like to watch the commodities that have been taking place and seeing how well they're being absorbed. From the NASDAQ standpoint, again, the readings are all the same. You got magenta over yellow, right at the confluence of DOC spread here with, in this case, green is leading. So that's midterm buyers ahead, and we've been positive shakeout throughout all of this move. So none of that area has changed. And then when we go ahead and look at the euro setup here, obviously it started off with a huge bounce along with the interest rate rise, which was very strange. It was sort of like a concerted effort from central banks, because it made absolutely zero sense, because it just means being in euros is even less attractive than being in dollars at this particular stage. So that was quite bizarre. It'd be shocking to see the euro stay above one. It would be great intervention by central banks if it's able to do that, because there's just zero interest in wanting euros from anybody who's looking for a return. From a gold standpoint, surprising for everyone who thought that easing is coming. That's not what gold should do. The gold should be plummeting further if that were the case, and it's not. So sometimes you get the real market realities. And that's the thing with gold. You can push it for a little while, but overall it's going to reach an equilibrium that's reflective of the inflationary state that we're in currently. Oil, still right back at that 100 mark. So while your rate of inflation is certainly starting to dampen down at this, so we're looking at from March to this period roughly at an equilibrium state of about $100 a barrel. So that's been quite a few months tracking all at the same level, and that means that the rate of change that we're experiencing within inflation is not going to be as dramatic. However, the inflated costs are going to still be there, and they're going to continue to spread. There's just no change with that. So it's just going to become a new normal. Now the question really becomes how absorbable is all of that increase, and then it really becomes a question if there are any additional shocks. And I think that's why we saw some of the modification from the EU about sanctions against Russia. And I think you're going to have to see a softening from the current administration towards Russia as well, because you can't make it through the winter. At least in Europe, they can't, having the sanctions where they were from an oil and natural gas standpoint. And how they're going to make that work is an interesting one, because they're going to have to change some kind of position on that. And of course, you can see TLT going lower, meaning rates increasing. This is way off, though. We should be in the 103, 104 range realistically. This expectation of super lower rates moving into the beginning of the year, if it's off, then this is way imbalance. The pricing is way off there. From a Bitcoin standpoint, it was excited about the news along with everything. It just pretty much mimicked the market. But again, look at those positive extremes. So we got the beginning of the first series right there. The secondary ones all the way down to 21.5 to 22.5 range for retraces as that starts to develop. And I think it's going to be pretty straightforward. ETH got the same rise going through. It was pretty dramatic for it. And clean nonetheless. And then in the post-market here, continuing a little back and forth. That was what we were seeing from an ES standpoint, because we had the huge run-up and serious positive extremes. And you can see me even from a 50K standpoint. Full run comes all the way back here. Usually in those big bars, we often get the secondary bar fills first, which literally virtually did in the pre-market setup of that. Of course, the gamma orange signals loved the buy on that and took that action coming off the short setup prior to that. So that was exactly what you want to see. This is what I had been marking, was the positive extremes from back here at the end of the day, and that we would start to see some fill back into that. And a lot of the middle ones that took place got filled back within that setup. We're still a little further to go. 1592. We had a low down at 4,000. So it was within 8 points of filling the full range of the positive extremes. And yeah, that's helpful from a targeting standpoint. It was just a question of right here we had the turnaround, but I don't expect this to survive. It's just you can get a nice run from this, and if that magenta continues to stay higher with the retreating red and white, then it's got a shot at it. In this particular case, I think that you've got to see that magenta dip down here below that 33 to get any real resonance and strength for the further decline. So we'll see how it plays out in the current one, but I would still expect that positive extreme range of the 92 to have fell. And then up above, we have that other one at 4031 range. So easy markers, and makes it pretty clear for us on the directional idea. The macro situation, I think, is so in flux in a lot of situations. I think that we're going to continue to see, particularly going into September, and then once we get there, it's going to be a wild one with the election heating up and things like that for midterms, because that's going to have a broad effect. We saw that they finally agreed on the stimulus package of $800 billion or so. So we'll just continue to follow it and trade signals as they come. Trade well. We'll talk to you later.